does Andy see with the refiners? Are they taking junk to melt? And if so, how far from spot is he buying and selling junk constitutional silver?
That's for the first time, it's starting to come up. If for the first time in quite some time, the premiums are rising on junk silver. I don't know what the bid and ask is, but I would guess the ask is right at spot or a little higher, probably even. And the bid is probably still back of spot. I don't know how considerably, but I do know that they are starting to move higher. And it's really important to understand that this isn't really an issue of companies like mine as much as it is the market in general, starting at the very top with the primary distributors. The primary distributors, in January when all of this happened, not only did we have margin rates increase by 300%, meaning if you did margin, your costs went from roughly $15,000 per 5,000 ounce contract to hedge or to speculate in to $54,000 in 5 weeks per contract. And if you have 2 million ounces like we would, that's $50 million in a margin account just sitting there as collateral. Cost of margin went parabolic. The ETFs rebalanced, the levered ETFs, as they always do the first 2 weeks of the year. So these two events created waterfall selling, which cratered the market. At the same time, you had the public who did not buy into this escalate up at anywhere near the same level as they sold. Massive selling into the end of the year. People gave up. The people who had been holding for a long time, they sold. So you had massive selling. At the same time, the prices created absolutely collapsing. At the same time, margin rates have gone parabolic. And if you didn't hedge, by the time you paid someone and they walked out your store, you're already underwater. And then it coincided with a perfect storm with the 2026 allocations coming out, where the primary distributors who are already choking on product that they've been buying for the past 2 months now have to buy the 2026 Eagles, Buffaloes, Maple Leafs, Krugerrands, Philharmonics, Kangaroos, Platinum, Gold, Silver, plus all the deals they have with the private refineries and mints. It created a perfect storm. I've never seen it like that. It's no different than when we were paying $12 over spot for Silver Eagles and $9 over spot for junk silver for 3.5 years during the pandemic. One end of the spectrum, the other. And markets usually, they'll start at fair value, they'll go there, they'll swing through fair value, they go here. And we are slowly on our way back as the market hopefully normalizes. My point is that I think the next run up, the people who really needed to sell and get out, they're gone. They didn't buy for the right reasons. They didn't hold it as wealth. They held it to get wealthy. They figured it's time to go. And they were frustrated by it. And I understand that. People who have hung on aren't the people that are buying like the central banks for, 1,000 tons a year or more. They tell us 1,000 tons, but just like the World Gold Council said for the first quarter, they were only off by a factor of 15. So it's probably a lot more than that. But the point of it is they don't care about any of this stuff. Their purchasing is inelastic. They're buying regardless. I believe this run up, you'll see more purchasing than selling. Things will normalize this next run up. But what happened was massive selling, jacked up margin rates, rebalancing ETFs and the allocations for the new year coming out. You couldn't ask for a worse cocktail of screwedness. And it's now, which blew up the refineries. It's now just starting to free up. I would hope by the end of the year, we see much, much more normal premiums on things like junk, where you're paying over spot for it and getting paid over spot for it, or spot at the worst. But they are starting to turn up for the first time, literally, that I've seen in about a year.
So yeah, I think that's interesting. So do you have any advice? Would you recommend they wait to sell constitutional silver?
Absolutely,
would you be buying it right now?
would. I still think look, I'm selling 100-ounce bars at 15 cents back a spot right now. I think that's as good of a buy as constitutional right now. But, they're both great buys from a standpoint of value historically. I wouldn't sell it right now. I wouldn't. I would be buying it if anything, because you're not getting the fair premium that you've always gotten in 36 years that I've been doing this. This is an outlier. So just like the pandemic was a 3-year outlier, right? It lasted longer than most people would have thought, because right after the pandemic, you had the banks failing. So it went from virus to the banks. I think that premiums will go higher. I think the public will re-engage. The movement we saw towards the end of the year had squat to do with the public. They were selling into it. It's all central bank buying. That's what's driving the market, still is. The public will wake up, but after these people who have been buying copious amounts have already repositioned, that's the way that it always goes.
When the critical minerals report came out yesterday, what, if any, effect does that have on gold and silver? And what I would add to that too is, do you think that there will be eventually a floor put in? I know we still have a few more days left.
Well, they said they would.
Yeah.
You know, like, there's a fine line between conspiracy and reality. So let me just put a disclaimer out there. This is all a guess and a theory. A lot of people talk about, well, there's all these deliveries on COMEX, but it's just shifting chairs on the, on the deck of the Titanic. Not as much as being delivered is leaving. Now, there's been some leave COMEX for sure, but what if it was the U.S. government? Let's just pretend for a moment. What if the U.S. government said, let's short the shit out of the paper price. We'll use proxy banks to run cover for us. They'll purchase it, and they'll move it into the eligible category on COMEX. So people don't say, look at all the metal that's being bled out of the COMEX. Where did it all go? Some left, right? February, we saw 39 million ounces of silver leave COMEX. That's 2.9 million pounds or something like that. Some did, and same with gold. But if you wanted to blow up the COMEX, if you wanted to accumulate silver and gold because you viewed them as critical, number one, you wouldn't need congressional approval if it's done through the Exchange Stabilization Fund. Number two, the CME group on their website says we do work for central banks. So what if it was JP and Citi and whatever, they were doing this by proxy, knock down the paper price, stand for delivery, and instead of it leaving COMEX, which would have earmarked footprints, leave it in the eligible category. So people say, well, nothing's leaving, nothing's changing, the inventory is staying stable. If you are the U.S. government, do you have to worry about the sanctity and safety of the eligible category? Now remember, there's registered, there's eligible. We have one of our 9 vaults with Brinks is in the COMEX ecosystem. It's in New York. I have one client with 2 million ounces of 1,000-ounce silver bars. Those are eligible. They're not for sale. It's counted in the COMEX inventory. It ain't for sale. So what if this is moved to an eligible category and no one knows who the client is? Remember what Blythe Masters said? Blythe Masters used to run the JP Morgan trading desk. And they asked her, why is JP Morgan buying all this shit? Well, we don't buy it for ourselves. It's for clients. We do not buy it for ourselves. Who is that client? Who's got the money to stand for delivery for billions of dollars worth that we've seen? Now it hasn't left. But standing for delivery in and of itself is an anomaly compared to what we saw for years where no one stood for delivery. I'm just simply saying, what if? What if it is the U.S. government behind it? Just thinking out loud, could they actually be doing what they've done forever for other reasons? In other words, yeah, let's just play this game a little longer, knock down the price because these guys are building price setting exchanges. We better do it quickly. We'll knock the price down. We will stand for delivery, but leave it in COMEX under our name. But don't tell anyone it's for the U.S. government. We'll slowly start to take delivery over time. Just saying, like, there are things happening that are strange.
It could be very well. I mean, look, we've been talking about a Fort Knox audit.
And again, that's my own guess, by the way, okay?
Yes.
I don't know anything. That's just my own guess.
But let's just say not everything's in Fort Knox. Okay, I don't think it's empty, but let's say it's not all there. Maybe it's been spread out to other vaults. Maybe some of it is already, it's been lent out to other people. I don't know. But if it's not all there and you're aware of that and you're running the country, you might, and you care about gold and silver and you understand how it works, like President Trump does, you just may do some sneaky things because you don't want to tip your hand to, to China and to other countries on what's going on. You may come up with some very creative ways.
Well, like the central bank said, we bought 16 tons, and the World Gold Council says, you're lying bastards, you bought 240 tons in the first quarter, 15 times more.
That's a big difference.
So yeah, to think that misdirection is just a one-off, I mean, it's everywhere. In every game that you have an opponent, you misdirect. That's the book, The Art of War. And You misdirect from checkers to baseball to football to basketball, the no-look pass. There's misdirection everywhere. This is why Art of War is taught in business schools on corporate hierarchy and law schools on formulating arguments and mandatory reading at West Point and CIA, and Bill Belichick read it for formulating game theory, and misdirection is everywhere. So in this world that is on razor's edge, where information is instantaneous, you have to misdirect with price, rhetoric, and logic. So, like the footprints say, well, okay, the price got carjacked the first quarter, but the central banks, the most well-informed traders in the world, bought more than ever before and lied about it by a factor of 15 and were called out by the World Gold Council. Makes you wonder about everything they tell us. So I don't know. I think that what we see happening in Hong Kong and in Asia in particular with these new exchanges and in Dubai, which is a one-day instant settlement kilo bar, 1,000 ounce silver bar instead of 5, which are much more useful for small, medium-sized industrial businesses. These contracts, they're starting to, I think they will start to have meaningful impact where you have more exchanges setting prices than just one. That's when you begin to see price discovery. And maybe that's why we've seen this massive flow of gold from west to east. It's less that flow and more a system, a paper system migrating to a physical delivery, immediate delivery system in Asia that will have impact. Not instantly, but to dismiss it is a big mistake. And maybe that's part of the reason you saw JP Morgan move half their trading desk to Singapore. Could it be? Sure. All of these things are clues. Can you connect the dots? Do you have the courage to say it out loud? I say it could be, because a lot of it doesn't make sense. And the deliveries based upon the price getting destroyed don't make sense to most people, but they do if you think it's counterintuitive. And that's exactly what they want people to believe.
Yeah, I will give it to you that everything is cloak and dagger these days. We don't know how everything's going on. You don't mention a Fort Knox audit and then not do it for just no reason. You probably mentioned it to get people's attention, to get them thinking about things. And then you mentioned it a few more times, and then you don't do it because you don't need to and you never planned on doing it. Right. So you got to look for that stuff too.